Hello and welcome. We're about to unpack the huge changes coming to UK inheritance tax in 2026. And believe me, you're going to want to hear this. Whether you're a business owner, a farmer, or you simply own your own home, these new rules are set to completely change the game for the legacy you leave behind. So let's dive into what you absolutely need to know with a little help from the experts at My Tax Accountant.
And I just want to be super clear here. All the insights we're covering today come straight from the specialist team at My Tax Accountant. These are the folks who live and breathe this stuff, navigating the ins and outs of the UK tax system every single day. So yeah, we're in very good hands.
So why are we talking about this right now? Well, take a look at this number. By 2031, the UK government expects to be pulling in a staggering £14.5 billion a year from inheritance tax. That's not a typo. This is no longer just a tax for the super wealthy. It's a net that's being cast wider and wider, and it's catching more and more ordinary families. The real question is, will your family be one of them?
To help you figure that out, here's what we've got lined up. First, we'll look at why this tax net is catching so many more people. Then, we'll get into the brand new rules for farms and businesses. This is a big one. After that, a really crucial update on your pension pot. And you'll definitely want to stick around because we'll wrap up with the practical next steps you can take and how to get the right help.
Okay, first up, the widening IHT net. For years, people have sort of shrugged off inheritance tax, or IHT, as a death tax that only affected the mega-rich. Well, let me tell you, that's a dangerously outdated way of thinking. Let's look at exactly why so many families are now finding themselves in the taxman's sights. So how does this all work? In a nutshell, inheritance tax is a 40% tax that's charged on the value of your estate once it goes over certain tax-free limits. Everyone gets a basic allowance of £325,000, known as the nil rate band. Now, if you're passing your main home onto your kids or grandkids, you get an extra $175,000 allowance on top of that. For a married couple, you can combine these, meaning you can pass on up to $1 million completely tax-free. Okay, so £1 million sounds like a pretty decent safety net, right? So why on earth are the government's IHT receipts going through the roof? What's the hidden catch here that's causing all this change?
And here's the answer. It's a government policy that people are calling the deep freeze. Basically, these tax-free allowances we just talked about are frozen solid until at least 2031. This creates this sneaky stealth tax, because while the thresholds stay the same, the value of everything else, especially property, keeps going up. Think about it. Imagine a freelance designer in London. 20 years ago, her small flat was worth maybe £300,000, well under the limit. Today, that same flat could easily be worth over $1 million, silently dragging her entire estate into that 40% tax bracket, even though her actual financial situation hasn't really changed.
All right, let's move on, because this is where the new rules get really, really specific, especially if you own a family business or a farm. We are talking about a massive shakeup to some reliefs that have been around for ages. Seriously, stay with me here. This next part is absolutely critical if you're running a family enterprise. Just look at the difference here. For decades, two reliefs, agricultural and business property relief, have been the absolute bedrock for family businesses. They basically provided a 100% shield from IHT, meaning farms and companies could be passed down to the next generation without being broken up. But from April 2026, that unlimited protection is being totally dismantled and replaced with a hard cap. And here's the number you need to burn into your memory. £2.5 million. That is the new cap per person for 100% relief. And it's interesting, actually, because the first proposal was for a much lower cap of just £1 million. It was only after a huge pushback from farming and business groups, who basically said it would force them to sell up, that the government agreed to raise it to £2.5 million. Now, for a pro tip, and honestly, it's a really important bit of good news in all of this. This new £2.5 million allowance can be fully transferred between spouses and civil partners. This is a real game changer. It means a couple can pull their allowances together, creating a $5 million tax-free shield for their business or farm. That is a huge planning opportunity you just can't afford to ignore.
Okay, on to the third big change, and this one could hit pretty much anyone with a pension. For as long as I can remember, pensions have been seen as this ultimate safe harbor for estate planning, a pot of money kept completely separate from the taxman. Well, that safe harbor is about to spring a leak. This timeline says it all. Right now, and up until April 2027, any money you have left in your pension can usually be passed on to your loved ones completely free of inheritance tax. It sits outside your estate. But from that date, they're tearing up the rulebook.
Most unspent pension funds are going to be dragged into the IHT net and will count as part of your taxable estate. This isn't just a small tweak, it's a massive, seismic shift.
As one tax expert put it, and I think this quote just nails it, pensions are no longer a safe harbor for inheritance planning. You see, the age-old strategy of using your pension as the very last pot of money you touch, keeping it safe as a tax-free inheritance for your family, that strategy is basically broken by this change. It forces a complete rethink of how millions of us plan for retirement and our legacy. So, after hearing all that, it's pretty natural to feel a bit, well, concerned. But look, knowledge is power. The key here isn't to worry, it's to prepare. So let's switch gears and start talking about solutions. In this next bit, we're going to walk through the practical steps you can start thinking about to plan your next move.
Right. Now, this isn't financial advice, but it's a really solid framework to get you started. First up, value your estate. You can't plan a journey if you don't know where you're starting from. Add it all up, properties, savings, investments, and yep, you guessed it, your pension pot. Second, review your will. An old will can be a total disaster. Make sure it reflects these new rules and what you actually want to happen. Third, look into gifting. Giving gifts while you're alive is a great way to reduce your estate, but there are strict rules, like the 7-year rule, so you need to know them. Fourth, understand trusts. They can be brilliant for protecting assets, but they are pretty complex. Which, of course, brings us to the most important step of all. Get professional advice.
Honestly, trying to navigate all these changes on your own is like trying to cross a minefield without a map. The rules are complicated, the stakes for your family are incredibly high, and one simple mistake could literally cost your loved ones hundreds of thousands of pounds. That's why getting expert help isn't some kind of luxury, it's an absolute necessity for your peace of mind.
And I have to be absolutely crystal clear on this point. Everything we've talked about today is for general guidance to give you a heads up on what's coming. It is not, and it should not be taken as, personal financial advice. Everyone's situation is unique, and you absolutely must speak to a qualified professional before you make any decisions.
And for that kind of tailored, expert guidance, you can get in touch directly with the team at My Tax Accountant. This is what they do. They specialize in inheritance tax, estate planning, and helping people just like you get their affairs in order. You can give them a call on 0208 570 8531 or just drop them an email at info@mytaxaccountant.co.uk. Please don't leave this to chance. So, we'll leave you with this one critical question. The rules are changing, the net is widening. Is your legacy protected? If you found this useful, please do subscribe to the channel for more essential updates to help you stay ahead of the curve. Thanks so much for watching.